Hello, Hardcore Finance Show listeners. This is Alex and Shimon coming to you today with lots of changes. But before that, Shimon, how are you?
I'm doing pretty well, seems that the bear market vibes are nearing an end, but we'll see about that. Doing
Yeah,
pretty.
there's a little bit of optimism in the market. It's kind of nice to see and hear, and optimism with our show. This will actually be the last episode of the Hardcore Finance Show. Boo! No! Oh no! Because we want to actually rebrand a little bit, change the name, give the show a little bit more structure, which is feedback we've heard over and over and over. So we'll talk about that now. Do this first show and the last show of the Hardcore Finance with a new structure, and then move on to the new show, which we're going to call the Dollar Auction. And it's actually an apt name because do you remember the Dollar Auction exercises that we used to do in business school,
Oh
Shimon?
yeah, absolutely.
So we can talk a little bit about that. So the dollar auction has a lot of ties into crypto and investments, and the theme still stays the same. And obviously the U.S. dollar. There's a global bid, an auction, if you will, for U.S. dollars, especially during a recession. People want to bid up the dollars. But the dollar auction is a game theory. It's a game theory game where you basically have a person auctioning off a dollar, and it says, "Hey, that someone with the highest bid wins, but the second highest bid loses their whole bid." So presumably someone starts off with 5 cents, someone else bids them up to 10 cents, and so it's a huge arbitrage. You can win $1 with 10 cents, right? But the person with 5 cents is like, "Oh man, well, I can still get an arbitrage if I bid up 15 cents. I can still get 85 cents value. Otherwise, I lose my the 5 cents that I bid. The 10-cent person bids them up afterwards. It's basically how to make it cascades into complete irrationality until people are bidding above the dollar for that same dollar because they don't want to lose. So someone bidding 110 gets outbid by 115 because the 115 guy says, "Oh man, I'm going to lose $1.05 if I lose it now. But if I bid up 115, I only lose 15 cents." And so it's there's no solution to this. It keeps on getting bid up until people just get exhausted and
I
give
mean,
up.
there is a solution, which is to not participate in the game. So it's an example of a game that you don't want to participate in. Once you put in a bid, you've lost, pretty much.
That's true. That's
So
true.
why do you want to tell our listeners why we chose that name?
Well, look, we want to start talking about a little bit about game theory, but the best game theory is you bid against Bitcoin, you're going to lose. So all of these things are essentially the second bid, or even the first bid, and people are going to lose. So I love that for that reason, but also Shimon and I were trying to think about there are a lot of different perspectives in the market about investing, and one of the angles that we bring to the market, we have an overlap in strategy. Both of us have been classically trained from an MBA perspective, a Boston Consulting Group perspective. I ran strategy teams at Microsoft, and then Shimon has done a lot of marketing strategy and growth strategy. So what we want to do is actually expand or reframe a little bit the topics that we've done and add a strategy angle. So we'll run through through kind of a new format of, we'll start off these podcasts with news and price action. Just overall, let's look at the market. Let's look at the S&P, what's going on. Then we'll talk about regulatory and policy news, because these are going to be very, very pertinent in 2023. And both of us live in and around Washington, D.C., so we can go down to Congress and actually give you the news firsthand. And then we want to talk actually about game theory and the strategy in the space, especially in crypto. What Shimon and I have found is very few players, mostly because the space is very nascent, but very few players actually approach moves from a strategic perspective. People are just doing things and making money doing things just because everything is rising. But there are very little choices or trade-offs. And I found this in literally every single company in the crypto space that I've talked to doesn't really have a strategy. So we wanted to give you that perspective. Like if Coinbase does X, Binance will do Y. I'll start helping you read the tea leaves, and then do a deep dive with a guest on a certain topic du jour of the week. Hey,
Du
Shimon, what do you
jour,
think?
du semaine. Uh, just because du jour means of the day. No, so
This
I'm
man.
very excited. I'm very excited about this new format, mainly because the idea of the dollar auction is how rational people, once they start acting in a certain way, get to irrational results. And I think a lot of what's happening in the global financial markets is just like completely irrational. But and we have many conversations of like, oh, are these people really stupid? Or and not necessarily. So many times the rational outcome is a result of just the way the rules of the game are set. And you can see the rules of the game of democracy, where you have to keep printing money because otherwise you'll be voted out of office. And you can go, this is the kind of the top level, but you can go sector after sector of crypto and traditional finance. I'm looking for some signal in this sea of noise and irrationality. So hopefully, us and our guests will be able to get to those insights because, many podcasts are just talking about what's happening. Many podcasts have an angle, but not many podcasts have this level of insight to really go kind of a little
Mhm.
bit deep and understand what's happening and what's causing the chaos that we're seeing. So that's why I'm excited about the new name.
Yeah, I love it. I love it as well. And so, why don't we just dive in? Let's talk a little bit about price action and the latest news. But let's start with price action. Shimon, let's do crypto. Let's do the overall markets. What's going on in the world?
I mean, in terms of crypto, the price structure is pretty much reminding us of how it was at the end of 2018, beginning of 2019. These are the vibes we're getting at like end of 2022, beginning of 2023. We had like a really hard bottom, which was caused by the FTX collapse, and we've been climbing slowly out of that. But to your point, Alex, there is a lot of excitement because this year, if we look at year-to-date stats, Bitcoin is up 37.5%. And together with that, we see Powell basically signaling that the hikes are not going to continue forever. So markets are also kind of ripping. Do you want to talk about the traditional markets?
Yeah, let's do that. I'm actually looking at it right now. So today's a fairly even day, although Nasdaq is up 1%. Yesterday was down 1%. There's a lot of chop now in the markets. What Powell said can be arguably dovish. He talked about, there's a famous line. He talked about disinflation 11 times in his latest speech, and he hasn't done that before. There's still a lot of chop. I mean, this is literally, for those of you who've been watching the markets, a battleground between the bulls and the bears. One day it's down. There's still a lot of people saying that we're going to hit an earnings recession and recession all up. And once we hit a recession, the prices crash. And they point to the 2001 bubble and others where actually after the Fed pivoted, prices went down by another 20, 30%, and which would hurt. I don't think that's going to be the case just because of the how fast the hikes were. I think we've gotten a lot of the pain, especially in tech stocks and far risk stocks that we've been talking about. We really felt the pain. So I don't think that's going to happen. Maybe other sectors, discretionary sectors consumer discretionary will fare less well. I feel like in our case, we should be fairly out of the woods, although, you never say never, there could be a downside. But yeah, overall, the markets are just choppy, when kind of looking to understand whether there'll be a soft landing or whether we'll truly crash.
Yeah, I mean, I think in the kind of very long trend, what I wanted to show our viewers here is that, yeah, there's a lot of choppiness in the short term because of tactical decisions that have to be made. What are the interest rates? Uh, you know, Basically, the economic theory says that the interest rates should be more or less around the level of inflation, right? It can be like 1% above inflation, 1% below inflation. If you want positive interest rates, you go 1% above. If you want negative interest rates, you go 1% below inflation, but it has to be around there somewhere. And it just seems that the inflation has been, declining, and people think that it's going to continue to decline, which, by the way, makes sense. I've heard many analyses that if you just stop printing money, the inflation just resolves itself. If the prices are high, it gives an incentive for producers to produce more or to invest more in technology, right? That can automate production, and that causes prices to go low. Energy is much lower than a year ago when the war started. Everything's going kind of in the right direction. So that's why people are kind of dovish. I want to share two long-term charts. So this is the long-term chart of the S&P 500, just so we get a little idea of this is
Gotta
from
get those ads out of the way.
yeah, I'm buying those ads, so it's funny. Anyway, so from 1994, it's not a very clear trend line, but like if we had to show a trend line, you can see that more or less we bounced off the trend line, and then we're like off to the races. So this is one source of optimism. And then if we look at NASDAQ, it looks even more interesting. So this is the long-term NASDAQ chart. So you can see that NASDAQ, if we look at, this is the 2007. I didn't want to make a trend line longer than that because we had the 2000 bubble, and so it kind of screws the data. But you could make the case that since 2007, when the 2007, 8, 9, when there was the big financial crisis, we're in a pretty solid trend line. And here you can see NASDAQ crashed below the trend line. And again, once it goes above, it should be a really good sign, and we're off to the races. So things are looking optimistic.
Yeah, things are looking good. Now let's do a little bit, optimistic. Again, there could be another flush, but we're probably, if anything, we're much closer to the bottom and to the upswing than we are to the. I mean, we've had a year of pain, especially in high growth stocks and crypto. We've had a massive year of pain. Why don't we talk a little bit about the news? What are you seeing in the market? What's been, there's probably 2 or 3 headlines that are fairly noteworthy. And then I'd love to talk about ordinals.
Yeah. So first of all, the news, one thing that you know more about is the regulatory front. So Binance supposedly is going to halt, I want to get it right, halt US dollar deposits transfers.
Yeah.
So why do you think that is, and what do you think about that?
Well, there's this whole thought that the OCC, which is the Office of the Comptroller of the Currency, which is a fairly moderate body, plus the FDIC, which is a fairly contrarian body. FDIC is kind of they're the insurance corporation in the U.S. And because they're like the second-hand regulator, they want to have their voices heard. So basically, the Biden administration, or the Democrats really, are trying to cut off the banking on-ramps into crypto into the U.S. So they're not banning crypto, but they're cutting off the banking on-ramps, which obviously would be which would be bearish for crypto in the short term, or the short to medium term. The OCC is said to come out with some sort of statement. There are rumors that they're going to come out with statements. The banking regulators came out with a statement that crypto can pose a risk to the greater financial markets. And what we're seeing is a realignment a little bit. Republicans are becoming pro-crypto and Democrats are becoming against, which is a shame because it's a bipartisan, it's really much a bipartisan issue.
Mm-hmm. But do you think that it could happen in the U.S. as well, or?
Look, it could. The issue is that what it will do is just drag it out. It's not going to be permanent because they can basically force banks to, they can create essentially regulatory headaches for banks. If you transact in crypto, we're going to audit you, and we're going to, it's going to be kind of predatory regulation, which will get sued, challenged in courts, and then likely get overturned because this is typical, regulation by essentially by through lawsuits instead of regulation through frameworks. And this never works in the US. So will it work? Short term, yes, it sucks because it'll maybe take us back a year, right? But as we go into the elections, into the 2024 elections, and more and more people keep on getting hurt. I mean, these guys are running around like Elizabeth Warren and Gary Gensler are kind of tied at the hip. They're running around and being all anti-crypto for consumer protection, and in the meantime, actually not protecting consumers. And so I think there's palpable. Every time I went to talk to the Hill, and I talked to people in the Financial Services Committee, there's a palpable want to actually do something productive, especially from the Republican side. And Democrats, because of SBF and FTX and the whole collapse, are just very gun shy right now. So I think we probably need 6 months for this whole thing to settle. But it's 6 months, right? It's it's all time, and time is the one precious commodity that we all don't have enough of. So will it be a lasting effect? No. Could it be a short term effect? Yes. And it's just unfortunate.
I'll tell you what I think. I think there's no chance that this is going to last in the US because, first of all, think about it. If you say you cannot use US dollars to buy cryptocurrency, that will basically cause people to sell their US dollars to buy another currency like Vietnamese dong or whatever, and then they can buy. Like you cannot do this on a currency basis. You can do this on the jurisdictional basis, but nobody's talking about banning Bitcoin in the US in terms of just like, if you're a US person, you cannot touch this. Because I think people are very smart. Legislatures are very smart. They're basically trying to balance two things. They don't want this thing to grow too fast and to like eat up too much of the traditional finance sector, but they also don't want to stifle it. And the more important thing, I think, is around inflation. So the more people hold dollars outside of the US, the more the US has a leeway to print money without feeling the effect in terms of prices. And I wanted to show you a crazy tweet by Lynn Alden. That is basically the title of the tweet is the US Treasury Department actually published this. So this is a slide from the US Department of Treasury that basically says, look, if things continue, now we're currently at around 100% debt to GDP. The historical high in 1946 was 106% debt to GDP. And this green line is the projection of the US Treasury Department debt held by the public as percentage of GDP. So like the only way, by 2050, you can get to Japan level, or by 2060, where they're projecting for us to get into Japan territory of 300% debt to GDP, held by the public. Guess what? The public is just like, the treasury printing money and buying the debt. So I think if this is what they project, and again, this is an official US Treasury Department doc, if this is what they project, they want as many people to hold dollars outside of the country, so this will be less painful.
Yeah, this is quite an interesting chart. Can you just, before we go on, can you touch a little bit upon why would they want more people to hold dollars outside of the country? I think it's a very important point.
Yeah, so basically, if you think of let's say you have a city that has a certain currency, if one day you just airdrop from a helicopter double the amount of currency, right, in that city, what would happen to the prices? All else equal, the prices would double. But now what happens if you airdrop the money half into the city and half outside of the city, right? And then, if again, all else equal, if there's no movement of money between the city and not the city, then the prices will go up only, by
marginally. Yeah.
And so what's important, what's not intuitive for people to understand is like the idea of debt of the government. Historically, it's something that companies and citizens buy, right? So the government issues a bond that pays like 4%, and then the public buys that bond, gives the money now to the government, and then the government pays you back the 4%, and at the end of the maturity of the bond, you get your principal back. However, since World War I, this has not been the case, and this was explored by Saifedean Ammous in his book, The Fiat Standard, where the UK basically said, okay, we are going to print we're going to issue all of these bonds to finance World War I, but the public didn't want to buy them. So the public only bought a third of the bonds that the Bank of England issued. And by the way, this was discovered only in 2017. It became public. Like someone actually went through the documents in the Bank of England and just found them. And now it's a PDF that's available online. And so basically what they did is they took two private citizens that worked for the Bank of England And those two private citizens bought 2/3 of the debt that financed World War I with money that the Bank of England gave them. So basically, they did it
Right.
off the books in an unofficial way. Nobody knew that it's the government who's actually buying the bonds. Basically, the government buying its own bonds is literally you just print money and then you can do whatever you want with it.
Yeah.
You print money, you give it to yourself, and then yourself can use it to fund social programs. So like that's the biggest problem with these auctions, right? Like before, in the era of Bill Clinton, there was a lot of arbitrage in terms of globalization. So the Chinese government held a lot of the U.S. debt. That's not happening as much, and so I don't think there's going to be a lot of I'm pretty sure that at 300% debt to GDP, you will not have citizens and businesses that will buy all of that debt. I think it will have to be the government, and that's what Japan did. Basically, Japan just like bought its own debt.
With its yield curve control. Yeah, no, this is fascinating, and I love when you do these story explanations. You have a very
I just heard about
story.
it a couple of days ago on a podcast.
Fantastic.
We can link it on the show notes. It was Saifedean Ammous on the Lex Friedman podcast.
And then so there's one more piece of news about ordinals that we should, and let's discuss it for the next 20 minutes because I'd love to, I've been going deep on ordinals, and tell us a little bit how we learn about ordinals. It's actually, you dragged me into this crazy world and I loved it.
Yeah, so I'm very excited to start going to the Washington, D.C. BitDevs meetup, which is basically the Bitcoin core developers that they just meet and discuss just technical issues. So it's not about policy, it's not about news, it's just technical stuff. They share code. And so that's where we learned for the first time that ordinals, and I know much less than you, so I will just be asking you questions. But the headline is that this is a way to create NFTs on Bitcoin, and in a way that's not like colored coins. Like before, there was an attempt to create NFTs on Bitcoin called colored coins that did not take off, but people are excited about this technology. So, Alex, why don't you tell us what are ordinals and why should we care?
So there's a couple of things. So basically, three things. One, thanks for dragging me to this. I'm gonna go to it with you from now on all the time. There's a way to basically find the exact time of the epoch, if you will, of the halving, the block, the exact time of when this block of Bitcoin was mined. Okay. So that's one. And then so you can geolocate, if you will, or time locate, if you will, how something is input or cemented into the Bitcoin blockchain. The second thing is because of Taproot, which improved essentially smart contracts, or gave an ability to create smart contracts on Bitcoin, and then segregated witness, SegWit, which allowed basically a bigger block sizes, because without going into details, you have the witness part can be up to 4 megabytes for the Bitcoin block, and then the actual input could be up to 1 megabyte of the Bitcoin block. You're able to store data, right, within an input. Bitcoin runs on UTXOs, which is like, I send you 5, you send me 3, there's leftover 2. This is how Bitcoin is traditionally been created. But with all of this, basically what you need to know as an audience, there's, like you said, there's a way to put in the actual bit code of a JPEG of an NFT into the Bitcoin blockchain around an ordinal value to say exactly this time and place it was done. And so, like you said, there is now a way to put NFTs onto Bitcoin. Now, the controversy with this is that you can put a lot of code and it can become pretty big because there's no limit on the size of the input for Bitcoin. There's only a limit on the block. So I guess technically the input can only be 4 megabytes big because the block is only 4 megabytes big. But you can take a whole block, okay, with one NFT. And so I think the Bitcoin maximalists are coming out and saying, whoa, this is not the most efficient use, because instead of all these financial transactions, hundreds of them potentially that are in one Bitcoin block. You now have one Bitcoin block with one NFT, and that clouds out everything else that's going into the block. So basically, sending money on Bitcoin or even on Lightning has become more expensive because you have now a bidding war, right, for fees. You have a JPEG that you want to store there, or do you want to store, a couple hundred transactions in that same block? And so a lot of maximalists are coming out and saying Bitcoin should just be money. It should only be used for financial transactions. We should not allow JPEGs and NFTs to be there.
So, okay, before we go any further, I really want to clarify a bunch of the things you said for some of our listeners that may have found this too technical. So, what you said is that basically the ordinal is that every block, you can know since the inception of Bitcoin what number block it is, right? And then within the block, all the Bitcoin that are generated as rewards, right?
You also know which halving it is, which difficulty adjustment it is, which number of blocks. So basically, it gives you the number of the block, but also you can translate into time, actual time, like February 9th at 10:08 a.m. or whatever, right?
Yeah.
You can generate from these ordinals, so you can say exactly where it is in the chain.
Exactly, because if on average every 10 minutes you mine a block, right? Then if you know the number of the block, you can translate that to time since Bitcoin was launched. So that's number one, which is like it's an address on the Bitcoin blockchain, and then you can like anchor stuff to that address. Is that correct? So you can
yes,
a bunch of code, put it in the block. If you pay enough fees to have miners include your stuff in the block, you just put it in the block, and then you have something forever anchored in the Bitcoin blockchain.
Yes.
Are we understanding it correctly?
Yes.
Okay. And so then what is again because I really don't understand. I listened to a podcast with a Bitcoin maximalist. I really didn't understand his point because there was this whole debate earlier about the mining death spiral, which is like when 100 years from now, when there's no more rewards in the new blocks that are mined, only fees will be able to pay for the security of the network. And people were like, people are not going to pay all these fees. And then there was this whole debate of is moving something on the blockchain worth the fees? And so now what we're saying is that if this thing gets adopted, it will increase the fees. So why is that a bad thing? I really don't understand it. I thought that the more usage the blockchain has, the more fees it generates, it's actually a very good thing.
Well, because yes, which is, I think, more or less my argument. But what the maximalists are saying is that, these JPEGs, you don't need to put more ape monkeys JPEGs onto the blockchain. You're gonna crowd out financial transactions, and then you won't be able to use Bitcoin, for financial transactions and as a money, as a medium of exchange later on. So for a Lightning node to run on a block, right, for Lightning to work or for nodes to open is going to cost a lot more. And so then you're going to get rid of the cheap way of transferring money. And I don't necessarily.
So it's a Lightning argument. The argument is
it's a Lightning, but even outside of Lightning, just sending a transaction. I send you one Bitcoin, okay? It has to be mined. Now, if a miner chooses to mine a JPEG, and the JPEG takes the whole block, it won't take me 10 minutes to send it to you. It will take hours to send it to you, because it will need to find an empty block of empty space.
No, it just means that you'll have to pay more fees.
Or I would have to pay more fees. Yeah. Exactly. And so there's going to be
I'm asking, how is that a bad thing? I thought that more fees is a good thing.
I agree with you, other than it becomes more expensive to send things along. And they're basically saying to keep the network clean and send things along. Now, look, there's a couple arguments against this, which frustrate me, or the maximalist argument. One is that at a principles level, they're now, there was code is law and, libertarian open technology. And now we're saying, no, it shouldn't be an open technology. It should only be used for financial transactions. It's like, okay, well, who are we to tell people what they want to pay for and what they want to store on the Bitcoin blockchain? I think that's one. Two is there's an argument of saying, well, it's so stupid that people want to store their little Bored Ape monkey NFTs and so on and so forth.
I don't think this argument is even worth addressing because, like, okay, it's my medical health records.
Exactly.
Or I want to store my prediction about the baseball game and timestamp it. There's so many uses. I really don't agree with the idea. I mean, I think that
totally
that using it for pictures is stupid, but that doesn't matter. It's just my personal opinion. If somebody else wants to use it for pictures, maybe somebody will come up with a fascinating thing that you can do on the blockchain that we're not thinking right now. It's just like a public database.
Exactly.
Let's not forget, a blockchain is a public database that everybody can write to if they pay enough fees. That's it.
Exactly. And I totally agree with this argument, because while people talk about, let's say NFTs is, it's all nice and good talk about JPEGs, but like you said, medical records. I always had a thesis of Bitcoin will take over finance and DeFi because it's money. Your most valuable things are going to go into the most resilient chain, which is Bitcoin. And identity, medical records, passport information, titles, card title, house titles. Why would you? I mean, I guess house titles you could put on Ethereum because Ethereum also would work. But Bitcoin for identity, when you really want something that's government proof, so a woman in Iran can escape Iran and say she's who she is, right? And she owns X, Y, and Z, or in Africa or Venezuela, or think about the oppressive governments that we in the Western world think are oppressive. It's very myopic to say, oh, it's Bored Apes, monkeys, these crypto bros. This is just the excitement in the beginning. The real use of NFTs, I think, are for identity, right? And finally, we have a use case of actually bringing NFTs to Bitcoin. And also from a very selfish perspective, Bitcoin gets a new narrative and excitement, which it hasn't had in a while. I mean, look, it's all fun and games for Taproot. It's, who cared about Taproot? No one other than hardcore Bitcoiners. Same thing for SegWit. Ethereum has a lot of the excitement and ability to build upon this. For the first time in many years, Bitcoin actually has a use case which people are getting excited about. Draw more people into that technology. And the more use cases of the tech we have, by the way, going back to regulation, everything I hear from regulators are give me a use case in the US that's outside of just payments, because payments in the US is not a problem. Fees or no fees, for them, it's not a problem.
I don't want to hear about the real use case.
You don't want to, yes,
escaping financial repression, and it's literally the only thing you can do. I'm writing a book now called The Privatization of Money, and I'm exploring different ways in which governments have screwed their constituents by just like destroying economies. And it's crazy. Sometimes even after I'll give you an example. In Argentina, and this will tie back to ordinals, I promise. In Argentina, there have been companies that were nationalized and privatized several times in a row. Can you believe this? So they take the telecom, they say, look, our rates are more expensive than the rest of the world. People are waiting for a long time to get a phone. Back before cell phones. So let's privatize the telecom. They privatized the telecom. Prices dropped by 90%. Investment in technology is great. Everything becomes really good. And then the government gets into another financial crisis and they say, ooh, these telecom companies, they're very profitable. Let's nationalize them. Can you imagine? And it's like there's nothing you can do against this. As long as your securities or your money or whatever financial instruments are, as long as they're tied to the government can do anything. And I actually think the government in the US is pretty good compared to other governments. But that's the use case, which is like a way to store your value, right, outside of government control. Now, people are saying, oh no, you're crowding out my imagine this is like a train with each block is like a freight train, container, and you can put whatever. And you're like, I want to put my money on this train, but the stupid JPEGs, they're crowding it out. It's like, okay, so just pay a little bit more. Yeah. You can put your money on the train, and then it will actually be great to see what is the value of escaping government repression.
Yeah.
And the more the government represses it, the more people will pay. The less the government represses it, the less people will pay, and then the JPEGs will be on the train. Like, I don't see any problem with that.
Yeah, it's like the Maximalists have become, so right, kind of, it's literally right wing conservatives. Like, don't touch anything, and it can
Yeah.
only be used. It becomes a religious cult instead of saying, okay, there's a new use of the tech. When we always talk about this, any new use case pushes the tech forward in any way, right? So it forces people to change, it forces people to adapt, it forces potentially improvements to the Bitcoin protocol, much deeper improvements than we've seen before. And by the way, I just want to bring up two points here. One is whether you hate or like Ethereum, the fact that Ethereum was able to change from proof of work to proof of stake while kind of flying the plane without a hitch is an incredibly impressive engineering feat. With no bugs, that is just, again, a live protocol moving billions of dollars per day, right? Being able to shift and without a hitch. I mean, Bitcoin needs to be able to do that as well for this thing to become alive. We talk about quantum computing. We always talk about, difficulty adjustment would improve and Bitcoin devs will improve it. Yeah, show it, right? And I'm confident that they will. I'm confident that it will happen. This is a chance to do it. And even, by the way, as an aside to the side, in the Bitcoin dev meetup that we went to see, they were all about it. They weren't like hating on it. They were actually geeking out on how cool this is. I think a second thing is, as we talk about strategy and game theory, let's touch a little bit about strategy and game theory. Again, not investment advice. None of this is investment advice. But not only does this bring a new narrative to Bitcoin, it also shows the importance of L2 scaling solutions on top of Bitcoin. Payments, that's Lightning. For smart contracts and all these uses, it's Stacks, right? So if we think about kind of the Stacks ecosystem and why I think they're so bullish on this is because you're not going to want to put every monkey JPEG into Bitcoin. But you might want to do is put them into Stacks and then have them batch down into Bitcoin in some sort of way, right? Stacks uses Bitcoin to mine. They don't batch into it. They're not exactly a layer 2 solution like a ZK rollup is or Optimism is on Ethereum. They're pseudo, right? So I think it's actually fairly bullish for Stacks because they do use the security of Bitcoin as their security layer, essentially. So I would think once the dust settles, right, everyone's excited about it. Everybody's showing charts of fees that are going to Bitcoin miners and so on and so forth. The dust will settle in like 6 months, but it brings a new narrative and fresh air of life to Bitcoin, and I think ultimately to Stacks. So for me, I'm kind of looking at Stacks and seeing how they're going to react, and I'm pretty bullish on what's going to happen with them.
Mm-hmm. Yeah, I agree with everything you said.
And then I want, by the way, I want to ask you about one more use case, and then we can wrap up the show. There's a use case of whether you're for or against Second Amendment. Let's say, that people can put AutoCAD 3D print instructions for guns, right? In the US, we're like, oh no, because everybody can get a gun. You can print it out in a home, go shoot up a school. Horrible scenario. Nobody wants that. Good scenario is that somebody in Iran can go print out a gun and then stand up to the army because they're getting oppressed, or in Russia, and so on and so forth, right? That can also, you can't just send those things over email, but you could put them into the Bitcoin blockchain, right? And send it across and say, now you have, whatever drawing. So, it brings in the pros and cons. For every kind of knife, there's a butter knife and there's a knife you can kill someone with, right? So are knives bad? No, not necessarily. They're good for cutting steak and spreading butter, as well as, unfortunately, stabbing someone. So is being able to share AutoCAD drawings of a gun, is that good or bad? It could be bad. It could also be very good to enable people, right? To give people, let's say, protection. But it can be different than guns. It can be, some sort of human rights, or it could be, here's legal documents that you can use, or here's freedom of information. If you're in China, for example, this is notorious. The government blocks what you can see online. Maybe this is a way to pass news across, right, without VPNs. So we don't know what we don't know. But this is another way of using kind of NFTs or data within, Bitcoin that's government resistant. They can be transferred across. And identity, again, is the king for me as a use case.
Yeah, I mean, my only pushback here would be that I think there's cheaper ways to send data in a government-resistant way. Like, within Iran and Russia and all these, they know how to use VPNs, even though it's illegal. They can do it because, like, at the end of the day, there's not like what is a VPN? It's just like a server that you connect to, and then whatever you want to do, you relay through them. So like the worst that the government can do is have lists of these servers, but it's trivial to change the IP of a server. So like there's really nothing governments can do. So I just think, to my previous point, only things that are important enough to store in a chain that's government resistant will, in my prediction, in my opinion, be stored on Bitcoin. Anything else, yeah, you can store on Ethereum, you can store
Yeah.
on just like a database, like on Google Drive. Like there's nothing, my medical records, maybe I want to store them on Google Drive. Like, why do I need to store them on Bitcoin? So like in that sense, I'm not saying that this use case will be successful. I'm just saying that I have nothing against it because, like, why not? Why not innovate? And maybe something will come. I remember the first days of the internet, you couldn't do anything. You went to Disney.com, it loaded like 3 pictures, and that's it.
Mm.
People couldn't have predicted Uber and Amazon and all of the, it's like you build a network and it just like propagates. And also the importance of layers, what you mentioned about stacks. All of software development is done in layers, right? And so like someone told me, in your MacBook Pro, the state of the art MacBook Pro, when you open terminal and you write something to like list the files in a directory, that code was written in 1960 and it's still used today.
Crazy.
So for all the people that say, oh, Bitcoin is not changing, yeah, some things don't need to change. No, yeah, in 1960 you couldn't have a beautiful screen like a MacBook Pro, but the deeper layers where you want to list the files, why should that change? All I
One
want
of
to do
my
is, yeah.
one of my favorite examples of this is outside of the money converges on a one standard is the book. The backbound book originated about 500 AD when Jesus' disciples essentially wanted to spread Christianity. So before there was Judaism, there was the Torah. You had to start a scroll and take you years to read the scroll. And the Christianity, this is true, just to help adopt a new religion. We're like, hey, we don't need to read this for years. Like, open and close the book. You want to go here? Sure. You want to go there? Sure. And they created this backbound book. This technology hasn't been broken, 1,500 years later. And even with the Kindles and so on, it still exists.
Yeah, it's a good point.
So it's like, yeah, it's some things just work. That's
The wheel.
The wheel, exactly. The wheel, yeah. The wheel is a great example.
The wheels of the state-of-the-art HIMARS system in the war in Ukraine, same thing like 3,000 years ago.
Can you tell your story about the Roman carriages and roads? This is a perfect example of a standard, actually, of being able to coalesce on a standard.
Yes, we'll wrap on that note, but basically what happened is, so the Roman Empire was very much a maritime empire, and around the Mediterranean. And so, they had the empire and they wanted to send stuff from different parts of the empire to other parts. And so they had like a standard axle size because the Roman roads, they just decided to do the grooves for the carriages, right? And there was a standard size for that. So then for the ships, when you wanted to load something on a ship and load it off a ship, they said, look, we'll use the same width and then it will be standardized. I can load stuff in any port in the Roman Empire and unload it into a carriage and it just works. That became because those roads were already being laid out all throughout Europe, that became the standard for carriages. So in modern times, when you had like fancy carriages where the kings would ride, that was the standard size. Later on, when people invented the locomotive, the whole idea was that we want to run the grooves at the same proportion, so you can again load stuff from a carriage to a train, from a train to a carriage, right? Because like you have a train station, you have to bring the stuff from the train station to the village, right? So then, because the trains were operating this way, I forget a couple of steps, but eventually there was something about the space shuttle that used exactly the same width because you
Crazy.
needed to transport those things by train when you assembled the space shuttle. So, like from ancient Rome to space, the unit, the standard remained the same just because it was adopted already. And shipping containers was the missing part. Shipping containers, right? Again, they had to be loaded into ships, but then from the ships they had to be put on trucks. And if the container was too wide, then it's not gonna stand on the truck. If the container is too narrow, you lose money because like you could have put more stuff on the truck. So everything was optimized for the same thing. And so shipping containers to space shuttles.
That's amazing. That just again coalescing on a standard, on a protocol, if you will, and Bitcoin is a protocol. Shimon, I know you have to leave in 3 minutes. I can wrap up the show just to tell the audience we can let you go. I'll wrap up the show a little bit about what's coming up next, and then this will be hopefully the first episode of many more with the same format. And hopefully the format makes a little bit more sense with news and price action, and then deep diving into a topic. And we have a slew of amazing guests that are coming up. And I could
Please
tell
let
you
us know what you think of the new format. We're seeing a really nice increase in subscribers on YouTube recently, so thank you for that. And just let us know what we can do better.
Yep, absolutely. Well, Shimon, I know you have to run, so I will. We can let you can be our first kind of guest, which we will let go from the show. But thanks for coming on. I'll just say a couple more things, and then we'll wrap up. Do you have any last thoughts? Any last words?
No, just have a great day, everybody.
Have a great day. Shimon, thanks for coming on. So look, thanks everyone. It's just Shimon has just dropped, and it's just me. And like he said, hopefully you guys do enjoy this new format. We do have a slew of great guests from anyone in financial services to financial wealth, a lot of people in the crypto space, projects, and so on. And we're going to start bringing on more guests to give you guys more insight. And specifically, what I'm really, really excited about is the ability to dive in and do some of these game theory analyses and think through, okay, well, if player one does one thing, if Coinbase, for example, moves into the enterprise cloud, what's going to happen to Binance, to OKX, to Kraken, and some of the other players, as well as regulatory. Regulatory is a topic that's maybe not sexy, not exciting, but it is what drives markets, and especially it's what drives markets in the U.S. And in the U.S., the markets drive global markets, right? So everyone looks at the Federal Reserve, Chairman Powell, as the voice of what's going to happen to interest rates. U.S. interest rates affect global interest rates, and so on and so forth. So the U.S. markets are quite important for the overall world. And so we want to bring the latest and greatest to you and leverage the fact that we both live around D.C. We can go down to the Hill, talk to congressmen, talk to politicians, and be able to discern and give some alpha and give some signals into into crypto policy and what's actually happening. And hopefully that's going to be valuable to you guys. So please please subscribe, please send us feedback. Again, thank you for the increased recent subscribers that we've been getting. We like to continue to bring you guys valuable information, and I'm very hopeful, and I think that this new format and the show is going to do big things in 2023. So from the Hardcore Finance Podcast, the last day of the Hardcore Finance Podcast, we're signing off, and the dollar auction will start. Same people, same topics, same Alex and Shimon, different name. The dollar auction will start next week. And as the last episode of the Hardcore Finance Podcast, signing off.